Hi there, guys. My name is Jack, and this is going to be my YouTube channel. I'm just starting it off here and see how this goes. I am currently in school. I'm going to be doing school for the stock market come September here, and I really just wanted to get my opinions out about the stock market and stuff and kind of see where this channel goes. So here we can see the S&P 500. Obviously, we're clearly in the bear market, and it's really sucked. But I've seen it coming. In my opinion, I think we're going to go to 3,400, and I am actually based in Canada, but I follow the U.S. markets very closely because the U.S. kind of just dictates Canada in a way. But anyways, so here we can see it's at 36.74. We've had that big sell-off day, and then we kind of been chopping around a little bit since. We had an update. I think it was Friday. Today's Monday, a US holiday technically, but the Canadian markets are open. So anyways, if we go to a year-to-date chart, it looks pretty awful. Sucks a lot, obviously. We were in the bear market, and then here you can see we rallied, and then we're back down here, unfortunately. I feel, to be honest, there really is going to be an economic hurricane, in my opinion, coming. We see, obviously, inflation is just ridiculous. The Fed is raising rates like crazy, and rightfully, well, now they are maybe rightfully so, but it's already cooling like the economy pretty bad. You can see housing already affected by it and a few other metrics, obviously. And technically, the US is possibly going to be in a recession here, according to the Atlanta Fed and their GDP reading. So it's kind of, and then it's kind of crazy. And then, I really feel like it's just going to be a big hurricane. All these forces, like Jamie Dimon said, a hurricane, but I said that before him. I was always thinking that there's going to be, once inflation really came out, I felt that there was going to be all these forces, that the Fed's raising rate, and then inflation, and then the consumer and everything. It was just going to be a big, and then the pandemic stimulus. It was just going to be a big hurricane. I'm not sure what's going to happen. That technically the US is already in a recession, which is kind of crazy. But in my opinion, I would really, if you want, you could nimble at stocks right now. Just be very selective of what you do. I would not buy any money losers or even tech. I'm very hesitant to touch, but big cap techs, if the S&P, for example, we'll just use the S&P, if it really drops to say 33 or 34, which is I think where it's going to go, you might have a huge opportunity to buy big cap tech, and then it will be a generational opportunity. That's what I'm kind of looking to do. So in a way, I'm kind of hoping the market really bottoms out, but I think we have a while to the downside to go, especially when you consider that the Fed is just really starting QT, and it's already affected the bond market a lot. Last week there was all that crazy movement in the bond market. It was very interesting to see. And crypto just completely and utterly melting down as well. Bitcoin going below 20K. I believe it's back above that now, but it's just been crazy times. And you see, some stocks like tech and the money losers, especially, down 80, 90, 70% from their highs. It's crazy. But I'm, ever since November, as soon as as the Fed turned hawkish, I'd never even nibbled onto tech or money losers at all. I kind of got out, and yeah, I've been even somewhat hesitant to buy equities, especially once near about mid or end of January, after we hit the peak, or maybe February or so. I really felt that we were gonna go down, and then ever since then, obviously, you can see here we've sure been down. I think here was a correction. We were down about that, and then we rallied, and then we went into a bear market, rallied a bit here, bear market bounce, and then we're back into the bear market, which I think is going to last for a while here, realistically until inflation quits doing its thing. And that's, speaking of, that leads me to oil in a way here. I'm a huge, if there's one thing that I would be a bull on in the stock market right now, would be absolutely be oil, like 100%. The fundamentals is like there is no supply coming from North America. The only supply available really to increase in the next year or so is the Saudis, and the Saudi Arabia will not, believe me, they're permanently scarred from the oil prices of 2020, and they are also very greedy. So I'm willing to bet like 100% that they will not pump significantly more, and they themselves, because they effectively control the price of oil, because they're the only ones that can increase supply. So I really feel like they're going to make sure that the price of oil remains relatively high, especially, and all the oil companies as well, because they are still very much scarred from the pandemic and the low oil prices the past 10 years, as well as, well, in North America, especially all these anti-oil policies in a way, and, go green and ESG and whatnot, etc. I really think it's just like a perfect storm for oil. Like the demand will always be there, even, dare I say, in the recession. Obviously the demand will get hit, but I really think there'll be enough demand to keep, even in a recession, at about 90, $80 a barrel. I would hope, to the higher end of that, because I personally have a lot of oil, but I really think like oil is just the place to be. We've had a huge pullback. Like we're technically in a bear market in energy after, we've surged all this much in the past like 5 or 7 days. We've lost, well, the XLE was, I think, down plus 20, like 22% or something. It's just crazy. Personally, though, since I'm up in Canada here, I the TSX oil companies, especially the mid caps, like your White Cap, if you look at, what are they called, Crescent Point and Cardinal, Obsidian, just to name a few. That's kind of the ones that I have. I've like but specifically the TSX oil, like mid caps like that are around the 10 somewhat dollar-ish range, call it. They're so ridiculously undervalued. They have 2 or 3 or 4 PEs, which is insane. Like just like 2, 3 or 4 PEs, you can look at them and it's madness. They're so undervalued still, and you can look at their previous stock prices. Like I'll pull up, I think it's Crescent Point Energy here. If we go the max, you can see this is, look, and then you can see, well, obviously, we all know what's happened over the past, of oil and oil prices and whatnot. And here's another one here, but you can, real quickly, you can also see, where is it? The PE ratio here, 1.73. And they are just starting. I haven't even spoken about the return to shareholders. They're really capital disciplined, especially up here on the TSX, and they are super focused on capital discipline as well as capital return to shareholders. Not so much drilling. It really depends company to company, but they're really super capital disciplined, and they are really looking to give back to shareholders, especially, the past 10 years or so has obviously kind of somewhat sucked for oil companies. But if we look at Obsidian here as well, just use the Nasdaq one. Anyways, you can clearly like look at this. So, and even with, see, it looks like it's hardly done anything, but if you look the past year, look, I think it's Obsidian actually has one of the highest returns, I believe, over the past year. I think it's second to Athabasca. I can't get you an exact percentage on that, but I do remember seeing that, and you can see, well, clearly we're up like crazy here. And you could argue we still have a very long way to go. And also, again, look at the PE, 2.29. It's really, like, in my mind, and there's no supply coming from North America that's gonna reasonably change anything. The only thing that's gonna change anything is demand. And even then, I feel like we're gonna have very strong demand. Like, think about it. If the US has technically been in a recession the past 5 months, and obviously oil dropped, I think it was like $10 or something off of the Atlanta Fed GDP news. Immediately it dropped like $10 that day. It sucked. But if you think about it, that was the past 5 months. And what has the price of oil done? It's just done nothing but up the past 5 months. So one would think that demand, is definitely robust and still there. And even I think if you look at the recent gas numbers over the weekend, I seen a tweet. They are actually at the highest demand for gas over this past weekend here, Saturday and Sunday, this very weekend, even though, well, I don't know exactly what the gas prices have done, but I don't think they've pulled back recently at all, even with the drop in oil. They're still incredibly high. And I feel we won't really see demand. We are seeing a bit of demand destruction. That's obviously the biggest issue, but I don't think we're going to see it for a while. And, there's all this talk about the consumer balance sheet at the end of the day still being very strong. But I feel, and even though we're somewhat seeing, the economy starting to slow, I feel that consumer balance sheet is really going to go, they're saving it at the end of the day for food and energy. And I really feel that we're going to see continued strong demand for energy. And that's why I'm just a huge bull on energy now and for a year and maybe even further than that out. Obviously very much depends, but it's just the perfect storm for energy. I absolutely love energy. I really recommend checking out, the TSX energy stocks, especially the mid caps. They are like, you see these PEs, they're absolutely ridiculous. It's crazy. So that's just my opinion. And I hope you guys enjoyed, and have a great day.